From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on this Thursday afternoon. We will get you across every move this market made today.
Absolutely. I'm Juliette Sarli along with Nadine Blaney. We started off pretty well, Nadine, then we saw a bit of a peter out and we are closing lower by around 0.2%. The banks looked okay today. We were watching very closely, of course, tech though. It was all about Nvidia overnight.
Yeah, sure was. Actually, about Nvidia this morning, our time, after the bell, we did see the shares come under a bit of pressure. It appears as if there was just some disappointed in the outlook. And I think the consensus is it's because the bar has been set so high. Expectations are so great. I mean, really, the result for the third quarter and the estimates for the fourth quarter, not bad at all. It's just, it's priced for perfection. It's been the absolute hero of the market, as we well know, this year. But when I saw that chart, what came into my mind? Not
as bad as Tuesday. That was a strange day. All right, well, three themes we just went through. Nvidia, hard to impress. Deep regret, though, as well. We had the Mineral Resources AGM in Perth. Chris Ellison saying that he does have deep regret for what he has done. And, of course, the position that has put the company in. It was a market cap of more than 9 billion. It's now around, I think, 6, if I'm getting my figures right. A lot of course, investor upset at that AGM.
Yeah, and that is what those investor meetings are for. Those CEOs, as we've said before and heard from many of our guests, they work for you, the shareholders. So yeah, he had a lot of questions to answer too. And then we get to, again, what has just been a key theme this year and will continue to be so next year, this consternation around when rate cuts will happen here in Australia. And today, Westpac was at the last chip to fall in pushing out its interest rate cut forecast here locally.
So it's joined NAB basically to push out its rate cut forecast to May. So the second big bank to push out its forecast to May from February, and of course a lot more economists jumping in. Really interesting chat that I had this week. I think it was yesterday. The days blend together a little bit. But when a new economist that we had on, Justin Fabo from Antipodean Macro, and he said that he thinks the RBA would be really stoked with the job that they have done, despite all the political pressure and, of course, pressure from the cost of living impact. So it's quite an interesting conversation.
Yeah, I spoke with gentleman Clive Manguchu from State Street Global Investors today. He reckons that we're still on this narrow path to a soft landing, that the RBA will be successful in negotiating that soft landing. He's actually underweight Australian equities, just, a little bit of the growth story and exposure to China, but he's really optimistic about equities in general, particularly in the US, even in that really top expensive, top tech part of the market. It's online if you'd like to listen to it, ausbiz.com.au.
All right, let's have a quick look at the sectors, and of course kicking it off with tech after we watched the follow through from Nvidia. Xero and NextDC, of course, under pressure. Zip was off by 0.6%.
Yeah, it's so interesting. I was last on air at 11 o'clock to see how things have evolved, and the banks were all in positive territory. We did have, thought we were going to the banks.
So the retail stocks I put in there, I think we are getting the banks, but the retail stocks, of course, it's Black Friday tomorrow.
Oh my gosh.
So I had a great chat with James Garish about that. Paul Zara from the Australian Retailers Association reckoning $6.7 billion will be spent from tomorrow till Monday. I also had a really great chat earlier in the week with Grady Wolf about this, because she said, beware the retailer that's had a black month, not just a Black Friday, as they really try to, of course, offload their inventory.
Which reminds me that we have had Citi come out with a note this week. Lovisa has been downgraded, likes Universal Stores, Accent Group as well. And I had a chat with Chris Stott from 1851 Capital. He's still really positive on Adairs. And a number of people have been telling me lately what a great job Beacon Lighting has done. And there are the banks. So still in positive territory, although some of those gains being, a bit more muted as this session rolled on throughout the day today.
And of course, the energy players as well, a little bit of upside there. But let's get to the top stories. We mentioned Mineral Resources, the shareholder meeting, a lot of questions for Chris Ellison, down 2.5% on the close.
Yeah, at the AGM in New York, of course, News Corp shareholders rejected a proposal to end the company's dual-class voting structure, which of course allows the Murdochs to make most of the decisions while they own less equity in the actual business.
Web Travel Group required by its auditor to change its previous financial reporting. It came out of that trading halt down 4.2%.
Accent Group, fell after warning that its gross margins coming under pressure as retailers are forced to place heavy discounts on products to tempt shoppers back. And I can just say anecdotally, like, why would I buy anything not on sale right now? I mean, I always love a sale, but I just think, I'll wait for the sale.
Yeah, absolutely. And GQG Partners plunging almost 20% on fraud charges against India's Adani.
Okay, so let's get to a bit of analysis of the day and perhaps some of those companies. Jimmy Jiang is joining us from Macro Capital. So Jimmy, what went wrong through the day today that saw us pushing further into negative territory as the day went on?
Afternoon, of course. I mean, we kind of have to talk about the commodities first. So obviously, the oil prices are on the spotlight at the moment, and oil's been being targeted in different directions by those global geopolitical uncertainties. Obviously, to start it off, we've got the China's demand softening with oil consumption down about 4% year to date, and the refinery utilization rates are now below about 50% due to the unappealing margin. So on the flip side, however, we saw the US oil demand is holding strong, so that's why we are seeing a bit of a jump, oil prices jumping up and down for the last few months, and with that processing rates at a seasonal highs at the moment. So these type of diverging trends kind of highlight that the mix of global demand picture, which could keep the oil prices swinging in the near term. So we're being a little bit more mindful of how this geopolitical development, especially in the Middle East, impacts the supply risk at this stage. And obviously, you guys dealt very briefly about Accent Group as well. We saw that retail sector is probably the hot topic today, along with GQG Partners. Yeah, as you said, the Accent Group is showing some resilience despite some of the gross margin pressure. So the first 20 weeks of financial year 25 saw the owned sales up to about 6.8% on the prior corresponding period, and they're tracking towards around 6.2% for the first half of 25, and their like-for-like sales maintained a solid 3.5% growth, which is very consistent with their early financial year 25 trend. So the company is also kind of revising a lot of new store opening target to about 40 stores for the first half of 25, which is up from the 25 originally, which is a significant beat to expectation. And now we obviously got the Black Friday as well, and we've got the Christmas seasons all coming up. But I think the market just kind of had that big concern around that gross margin, pulling back around 70 basis point to the end of October, and obviously the concern the company showed around the bidding wars, or I guess a sales war between the retailers in the coming couple of months. So we're kind of pulling a little bit back away from the retailers and also some of the commodities, just because we don't like the volatility that these sectors are presenting at the moment. Our focus right now is preparing ourselves for the next year with some of the stocks that will outperform under the Trump administration, and also the rate cut we can potentially see early May next year by the RBA.
Yeah, all right. So a lot to digest, really, Jimmy, when it comes to how you position as well. It's interesting to see whether or not we might start to see some of the Trump bump kind of fade, and how you play into that. Talk us through some of the specific stocks you're looking at.
Yeah, I mean, the Trump's US presidency is going to create a really favorable environment, especially for the ASX-listed companies with a significant revenue exposure to the US. Their administration is expected to reintroduce those pro-business policies, such as those corporate tax cuts, those deregulations, and the investment incentives as well, which will create more profitable operating landscape. So to give a couple of examples, we got guys like Aristocrat Leisures, for example. They have a significant portion of its revenue coming from their US gaming and casino markets, and the Trump's pro-business policies, including those tax breaks and the incentives to fuel economic growth, could really lead to that increased consumer spending, especially in the gaming area. And to kind of give you another example, we've got guys like Wally, which is another really good one to watch, because they're essentially a global engineering and project management firm, and they have a significant extensive operations in the US energy and resources sector, and it kind of stands to benefit from Trump's focus on that energy independence that US is really striving. So if the administration actually revives their policies supporting that traditional energy sources like oil and gas, while we definitely could see that surge in project opportunities and also the revenue growth as they've been already demonstrating. Another one is like Block Inc., for example. They were formerly more probably known for the public as a Square. They have that significant gain exposure from Trump's economic agenda, which kind of historically prioritized their small business growth and consumer spending. So their financial technology solutions are kind of widely used by the SMEs, so small to medium-sized businesses over in the US. And the stronger consumer confidence and spending that we can see over in the US economy could really see the higher adoption rates and the transaction volumes processed through the Blocks platform. And one of my dearest one is James Hardie, always been my favorite one that I spoke on ausbiz. They have a significant operation in the US, and they have a very strong position to benefit from any of that renewed emphasis on infrastructure and the residential construction over in the US. So during the Trump's previous term, we saw housing construction activity rise due to their economic stimulus and the lower corporate taxes as well. So if that similar policy direction is pursued with Trump's new administration, demand for James Hardie's product really will grow significantly, and particularly around the infrastructure investment ramps up on that favorable mortgage conditions to encourage their construction. So those are the 4 names that we are allocating or preparing the allocation over the next couple of months, but probably not immediately in the next week or so.
Well, okay, so what would be the trigger to invest in any of those aforementioned stocks, Jimmy?
The thing that really kind of makes us urgent, we're going to make a decision in the next couple of days, is actually that Christmas rally that we've seen quite consistently over in the US. So the market always moves quickly ahead of the Christmas rally, and we obviously got some, a lot of the Australian fund managers going on a holiday in a couple of weeks' times as well. So these are the 4 names that we have shortlisted in buying, but we probably have to do a little bit more further due diligence on some of these, the industry focus, reports that we might see, like the AGM, for example, as well. So James Hardie in industry and Block is probably the 2 names that we'll start allocating first, and the Wall and Astropet Leisure is probably the one that we'll do in a week's time. So it's probably something we definitely want to allocate before December, just to expect a bit of a Christmas rally we see both in the US and also Australia as well.
All right, Jimmy, thank you. As always, Jimmy Jiang there from Macro. And I need to correct myself. I'm so excited about Black Friday sales. It's not tomorrow, it's next week.
Well, that's what I was thinking. Oh my gosh, I'm going to miss the sales. But yes, Black Friday sales next Friday. Cyber Monday event here at ausbiz on the following Monday. Get yourself a stock on sale. Some of our favorite expert guests, they're all our favorites, but some of our regular expert guests will be giving you their cheap stock pick. So good value, plenty of upside on our Cyber Monday event. You just register ausbiz.co/cyber.
All right.
How's that for a segue?
That was a great segue. It's like you've done it before. The stock of the day, meanwhile, was Mineral Resources. We discussed the AGM in Perth. Mark Gardner from MPC Markets and Ben Richards from Seneca Financial Solutions joined Andrew.
I think you wouldn't necessarily be rushing to buy it right now, but I think you'll probably look back in about 2 or 3 years' time and see this is one of the better buying opportunities. So I'll call it a buy, but I just don't. With the caveat that I just don't think there's necessarily a mad rush just yet.
Yeah, I tend to agree with Mark. I think there'll be some sort of arrangement similar to a Richard White WiseTech, but in terms of MinRes, yeah, we think it's a buy on a longer term basis. It's had a lot of noise. It's been one of the most volatile stocks, but so regardless of the noise, we think it's got good value here, but just probably needs a bit of sentiment to turn when it comes to both governance and commodity prices.
Let's have a look at the market leaders on a day where we didn't see too much positive momentum. Sigma Health looking good. Amcor coming back. Of course, it was sold off yesterday on that announced merger tie-up with Berry. Today, though, coming back up 3.2%. Pinnacle Investment, Northern Star and Nanosonics also there.
Some of the laggards, though, today, if we flip the page, Weebit Nano, that's just notoriously volatile. Santa Mining tying up with Piedmont Lithium, down pretty punchy 11% today. Nuren, it's been on the nose a little bit this week, but a pick for many investors these days. Pilbara as well in the lithium space, and PEXA down 4.8%. That was a buy from the team at Seneca Financial Solutions on the call just yesterday.
All right, let's have a look at the small end of town. Brockman Mining having a very positive session. In fact, a lot of these really do come from the materials space. Encounter Resources, Santana Minerals, Magnetic Resources, and SKS Tech. What's that?
Well, let's move on to the laggards, shall we, to see what is coming under pressure. Restaurant brands, restaurant brands. I was just trying to look quickly. Can't see anything, but that is down significantly. So I'd say that they did have some sort of a downgrade coming through. Close the loop, takeover offer on the table, down by 16% today, which is interesting. And we've got Sayona Mining there, as I mentioned, tying up with Piedmont, I just said.
Yeah, and SKS Technologies, it came out with its numbers today, reporting a near 64% increase. And just a month or so ago, it won a $20 million Melbourne data centre contract. So I guess just playing through into that key tech thematic. All right, tonight we are looking ahead to a little bit out of the US, existing home sales. You've got the Kansas City Fed Manufacturing Index for November as well, along with the Philadelphia Fed Manufacturing Index.
Yeah, okay. So we'll be keeping an eye on that data. A very data-dependent Fed. Tomorrow we are looking at some PMIs coming through. But look, today was just one of those days. You know, we did see the local market coming under pressure. There are geopolitical concerns big time, you know, not just in the Middle East, but, you know, particularly around the Ukraine. We did have the Ukraine firing UK missiles into Russia at this time. But this is actually really sort of big news, I think, that will go for a long time, with that Indian billionaire Adani charged in the United States with bribery. So not just GQG, but obviously Adani Group shares tumbling in India. Really sort of big, 22 billion, there's the number, $22 billion in value wiped off after those US indictments.
All right, so the market there is down 0.2% as we finish out Thursday's trade. It'll be really interesting to see what is the key reaction on Wall Street to Nvidia when it starts trading in the main market, and of course the impact on the overall NASDAQ. We'll bring all that to you tomorrow.
We won't. I will. You enjoy your day off, Jules, and we'll see you on Monday. We'll see you tomorrow, though, at 9:45.